So the situation sounds a little more dire when you put it the way you just put it.
I don't know the answer to that. I do know that anything interest rate sensitive right now is very weak. If you're a small, mid-sized business, it is very difficult to get a loan. If you're in the goods sector, business is very weak. So there's a number of sectors of the economy that are affected by the Fed funds rate feel like they're in a recession right now. Then you've got this counterforce I just talked about of government spending that's going into construction and is really going into services, meaning if you have workers that are working at these new projects, they spend money in restaurants and they fly and all that other. And so the truth is, if I were at the Fed right now, I wouldn't act in the September meeting. I'd probably be inclined to be more patient than even November before I acted, but I would certainly leave open the option that I might have to act. The thing that would bother me is I'm not raising rates because of the organic strength in the economy. I'm raising rates because of the artificial extra stimulus being created by government spending. And the thing that would scare me and worry me is when the government spending starts to dry up, not in 23 or 24, but into 25, we may have a lot more fundamental weakness than I would like. But that's the reality I'm dealing with if I'm at the Fed.
So many things to talk about, too. The balance sheet roll-off seems to have been done pretty well so far. I mean, it hasn't created too much disruption in markets, near as I can tell. Although in March, we had a lot of stress building in the regional banking complex, a couple of bank failures. Some people were pointing the finger at the Fed, saying this is the consequence of aggressive tightening. We can put that aside right now, but in the interim or intervening period, there have been calls for a lot more capital on the part of banks. A lot of the regulators saying, hey, you need to put more aside in the event that there is some stress that continues to build. Jamie Dimon, for one, has pushed back against this. How do you see the overall banking system right now?
So a rough estimate would be if the Fed balance sheet went from 4 to 9 trillion pre-COVID to after COVID, it's now running it down to closer to 8. The best estimate I've seen is half that increase went into bank deposits. As the Fed is running down the balance sheet, as you note, it puts more pressure on bank deposits. Plus, bank deposits are repricing to a higher level. Plus, the backup in longer-term yields have eroded bank capital. So most banks I talk to right now are very concerned, quietly concerned about further bank deposits. They're very worried about their earnings being weak, and they need to show good earnings for the regulators and for the depositors. And they're being extremely careful about loans to small and mid-sized businesses. And they are, and the requirements for more capital mean there are two ways to fit into new higher capital requirements. One is to raise more money. The other is to shrink your loan book. And what I've seen is they're doing a little bit, they're shrinking their loan book and being very disciplined on loans. The thing I don't love about the requirement to raise more bank capital, the issue we had in March was not about bank capital. It was a supervisory lapse hiding in plain sight, where the banks took asset liability risk. It was well known to the Fed and to the regulators that they didn't act to get banks to clean it up. In response, the response has been, you need to raise more capital and we're going to be tougher from a regulatory point of view. But I think a lot of banks I talk to are frustrated. They think it was a supervisory issue, not a bank capital issue. And I think that's what you heard Jamie Dimon saying. This bank capital is not going to help, and it isn't what the issue was in March. The last comment I'd make about the Fed balance sheet, there is one sort of low fever symptom of the balance sheet runoff and all this government spending, and that's the backup in the 10-year. So we don't talk about as much as we should, but the 10-year Treasury has backed up a good 50 basis points. That is a very significant move, and I'm not sure it's over yet. And so is there some symptom of the runoff? We don't have as many natural buyers for treasuries. Used to be Fed was one. Banks, we know, were one, but they're not going to buy anymore because it created the problems
That's
in
right.
March. And so I would be watching, and I do watch very carefully right now, two things: where the 10-year is trading, and what's the price of oil. And those are two factors away from the Fed that are concerning.
Well, WTI is above the $90 a barrel, as you well know today. Rob, it sounds like you're describing a scenario where the transmission mechanism sort of works through small businesses, and next year we might get a slowdown. Will there be a drop-off in employment that will cause a recession?
So I don't know, of course, but I would guess there will not be a recession this year or next year, and the reason is the amount of government spending for the rest of this year and next year. And by the way, you notice that if you asked me 6 months ago, I think the best estimate on the deficit for this year was $1.25 trillion. It's now $2 trillion. Okay, we're running a very high pre-recession deficit.
It's an election year, though. Does that make a difference?
Well, I'll leave that to others. I think the point of this is this amount of spending that's a meaningful percentage of GDP is the main reason I think that we've got stability. We don't have slower GDP growth. It also means that the employment rate is going to stay, unemployment rate very low. There's substantial demand from every one of these projects for jobs. There aren't enough workers to do these jobs, and there's a lot of job switching to fill these jobs. I think this is a reason why the Fed, I hope they need to do more, and we'll need to keep rates higher for longer, and that's the trade, and you may see the 10-year back up further.
So we're at 428 right now. Can you see a 10-year at, let's say, 475, another 50 basis points?
So I'll take you, here's how I'd look at it. People are saying, gee, when the Fed starts to cut rates down somewhere in the future in 2024, maybe the 10-year will ease off. I think the bond market has already looked through that, and it said if inflation stays sticky, price of oil might be one of the reasons, and the Fed is able to get the Fed funds rate down to, say, 3, for example, 3%, at 150 basis point term premium, that gets you to 450 on the 10-year.
Wow.
This is why a lot of intelligent people are saying, I know there's been backup in rates, but I'm not sure we're at fair value now.
Wow.
And that's why I'm watching this very carefully, because it could create a further tightening in financial conditions, assuming the Fed is going to cut.
Okay, Rob, it's always a pleasure. Thanks for making time to chat with us. Rob Kaplan, former head of the Dallas Fed Bank. He is also the CEO and president of the Draper Richards Kaplan Foundation, joining us here in New York in the Bloomberg Interactive Broker Studio. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Daybreak Asia is brought to you by Interactive Brokers. Interactive Brokers clients earn up to 4.83% on their uninvested, instantly available cash balances. Rates subject to change. Visit ibkr.com/interest rates to learn more. We check the markets all day long at Bloomberg, and what a session it was in the United States, with the Nasdaq up about 0.8%, the Nasdaq 100 up about 0.8% as well. Similarly for the S&P 500, which closed the session at 45.05, back above that 4,500 psychologically important level. Of course, some of this was thanks to ARM Holdings, the biggest IPO this year. It took place, and ARM rose almost 25%, $59, to close the regular session at 63.59. Now, elsewhere we saw the dollar index rise as well, mostly thanks to a poor performance by the euro after the and decided that it was going to be a very, very sluggish road ahead. And that is your latest Bloomberg Business Flash. Well, chipmaker ARM, as we were saying, soared in its much-anticipated trading debut today. It raised $4.87 billion. ARM's CEO Rene Haas joined us earlier to weigh in on AI, ARM's growth rate, and business in China. Here's Rene Haas speaking with Bloomberg's Carolyn Hyde.
AI is everywhere, and if it's your edge device like the Assistant or the Alexa or your autonomous vehicle, that's all AI. And now we're seeing it in the cloud and the data center with all the growth of NVIDIA. NVIDIA announcing one of their newest products, Grace Hopper, that is based on ARM. So ARM is everywhere relative to AI. We also have a very unique business model that gives us the ability to have a very, very good vision in the future in terms of when people use our products. So relative to our confidence in the outlook, we have a very, very high confidence that the growth rate that we have talked about will be sustained.
How worried were investors about China and your exposure?
I think there were a lot of questions, as you can imagine, about China in general, given all the geopolitics. Our business there looks a lot like the rest of the world. We have great growth in the data center. We have great growth in automotive. China's huge on electric vehicles, so it's been terrific there for us. I have the same kind of headaches that every other tech CEO has regarding how to navigate through this, but no different.
Do you think there will be more pressure now that you're public again? Ultimately, I mean, you came to ARM in 2013, you were listed at that point, but it's not been since 2016 that you have been. How does the game change as a leader of that business now?
I think there's some things that we were able to do as a private company that will just be different, right?
Yeah.
Quarterly earnings, making sure that we hit all our commitments. But ARM is not a business you measure from quarter to quarter. You measure us over years and decades. And the long-term vision is something that I am very, very passionate about and will continue to drive the company the same way, private or public.
You have a lot of key vested interests, whether they be your clients, Apple, TSMC, Intel taking big stakes in the company today. How important are those voices vis-a-vis Massas, the head of SoftBank, who I'm sure you're on the phone to daily?
Yeah, so one of the challenges of our industry, in particular with ARM, is that the fact that we're everywhere, none of this works unless we play nice with others. So we have to have a lot of engagements with strategic partners and making sure that we're managing that balance, including Masa, our chief shareholder.
Do you think he lets more of ARM become public? Is that something you'd like to see?
Masa and I talk quite frequently, but it's really not about the day-to-day. It's about the long-term vision, the passion that he and I have about the future, and really about what this company can be long-term. So I don't expect that to change, being a public company.
Do you think you'd go public in the UK? I'm sure it's been bittersweet for the London Stock Exchange today.
Yeah, so today, obviously, we're in New York, but we're incredibly proud of our UK heritage, and we are open to considering that down the road.
Okay. Any sort of time frame for that?
None that we can talk about today. I'm trying to get through today a little bit.
Well, before you get through today in that respect, investors do love all things regarding artificial intelligence, but how have you managed to land that your story is different? People have been so exuberant about NVIDIA, where you used to work, but they're really exuberant about GPUs. How have you said that you are able to claim a larger royalty share of how AI continues to be served?
Yeah, so one of the benefits of the Roadshow was spending a lot of time with investors talking about AI and where we fit. And I think one of the misconceptions is that a GPU can run without a CPU, which is just not the case. The CPU is central to every electronics device, and there are devices that ship with a CPU and a GPU. So once investors kind of got that, then explaining where the puck was going relative to, gosh, NVIDIA's next generation, most advanced product, Grace Hopper, is using ARM CPUs instead of the competition, the light bulb went on. That, oh my gosh, you need the CPU, and at the same time, NVIDIA has made a big bet on ARM in their most sophisticated product. And once that message kind of sunk through, the light bulb went on as, oh my gosh, I get it.
And that was ARM CEO Rene Haas. World Business Headlines coming right up. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Asia.
And it's 6:28 a.m. in Hong Kong, 6:28 p.m. in New York City. I'm Vonnie Quinn in the Interactive Brokers Radio Studio.
And I'm Doug Krisner right alongside Vonnie at Bloomberg World Headquarters here in New York. We're about 90 minutes away from the action in Tokyo, Sydney, and Seoul. Final trading day of the week in Asia. Today in the U.S., well, a lot of positivity in the equity market. For example, the Dow Industrial Average was up by nearly 1%. We had some economic news coming in above forecast, and it seemed to add credence to this idea that the Fed is going to be able to engineer a soft landing. So not only were stock prices higher today, but we had Treasury yields moving up right across the curve. We've got a 10-year now at 4.28, a 2-year Treasury at 5.01%. We'll take a closer look at all the market action for you in about 15 minutes or so. We begin right now by updating a few of this hour's top business stories. Bonnie?
Well, we have to start with ARM. SoftBank-owned ARM Holdings made a splash in its Wall Street deal. Shares of the UK-based chip designer are jumping 25% in the session. ARM raised more than $4.8 billion. It was the biggest initial public offering this year. CEO Renee Haas talked to us about selling investors on the company and on the power of artificial intelligence.
It was a great process. Investors really wanted to understand the opportunity we had in front of us. And of course, AI, which you can't really talk about our industry without talking about AI. And I think helping them understand that you can't really run AI without ARM, without a CPU, and just pointing out to them that it's everywhere in every device that people touch was a big part of the process for us.
And that was ARM CEO Renee Haas. ARM shares opened at $56.10.
Well, Disney has held exploratory talks about selling the ABC network and some ABC TV stations to a local broadcaster. We get the story from Bloomberg.
The preliminary negotiations are with Nexstar Media Group, which has 200 owned or partner television stations in 116 markets and recently acquired majority ownership of the CW network. The discussions with Disney are preliminary, and sources say Nexstar would only be interested at the right price. Disney CEO Bob Iger said earlier this summer that he is considering divesting traditional TV networks like ABC, broadcasting cable channels of losing viewers to streaming services. In Washington, Ann Cates, Bloomberg Radio.
Well, from Disney, we have word that the company is saying no decision has been made on selling Disney, and Disney is open to options. Bonnie?
Well, Doug, Republican lawmakers are pressing the Biden administration to completely cut off Huawei Technologies and Semiconductor Manufacturing International Corporation from their American suppliers. The story from Bloomberg's Charlie Pellis.
The move comes after Huawei launched a new phone using highly advanced technology the U.S. has been trying to keep out of China's hands. The phone, which uses a made-in-China 9-nanometer chip that appears to rely on American technology, has stoked debate in Washington over the effectiveness of American attempts to curtail China's technological and military prowess. In New York, Charlie Pellis, Bloomberg Radio.
Global News is next. The current UAW contract with the Big Three auto workers expires at midnight, and in a little while from now, we're going to figure out or find out whether the Big Three will be struck against by the UAW. Let's get Global News from Ed Baxter. Eddie?
Yeah, exactly right, Doug. And what you're referring to, I think, is a news conference scheduled for 10 o'clock Eastern, at which it will announce its plans, on which we will cover here live on Bloomberg Radio. Bloomberg's David Welsh says very much looks like a strike.
There's been movement on both sides. Have another offer from GM today where they moved up to a 20% raise, which is what Ford has. That's over 4 years. And Ford's offer was rejected. Now, GM did move on some other areas. They added to the pensions for workers who already have pensions, but they didn't offer pensions for the younger workers hired after 2007. That's a big point for the union. They did offer cost of living allowance, which the unions wanted, but there was no detail on that. We haven't heard from the union whether or not that's good enough.
And Seth Harris of Burns Center today on Bloomberg says it doesn't appear President Biden can get into the fray in any way.
They're traditional collective bargaining issues, as David was saying, pensions, wages, hours, plant shutdowns, whether or not part-time workers are made full-time workers, temporary workers are made permanent workers. It's the kinds of issues that people negotiate about all the time in collective bargaining, and I don't think the president wants to insert himself into the middle of that. He'll play a behind-the-scenes role. He's got Gene Sperling out there cajoling both sides to negotiate and to help understand one another better.
Now, late word coming from Ford CEO Jim Farley is that the two sides are still very far apart.
Everyone thinks we're locked away in a negotiation room somewhere doing the final tweaks on a great deal, historic deal. The reality is we've got no response for our last historic offer, generous offer to the UAW. We've heard nothing.
So again, we found out more tonight. Justice Department indicts President Joe Biden's son. Details from Bloomberg's Steve Rappaport.
The Justice Department alleges that Hunter Biden purchased a firearm without disclosing that he was unlawfully using drugs. The indictment follows the collapse of a deal in July that allowed the president's son to plead guilty.